28 years, but you can't tell. Joined Allied Financial in 2003. And prior to that, he was employed with a commercial finance company, gaining experience in all industries. Tell us where to find the money, Pete.
Everywhere. To piggyback off of the comments that were just made, I have a deal currently that we had to pass on. This deal was at a regional bank. The company has really, really struggled. They're an importer and distributor of product. And the banker had suggested bring in a CFO for hire because the current CFO is not managing the business properly from a cash flow perspective. So to your point of can you wear that hat or not, it really depends on the time, but it's extremely important. In this business, I'm an alternative lender. I'm not a banker, but we work with banks, and we work with bankers. If the bank is telling them and they're not listening, that's a problem. Listen to the experts. You'll see I will kind of touch on that. But from a lending perspective and being the lender in the room, what Chrissy said earlier is so important. We gotta build the foundation. If you can't build the foundation from a financial statement perspective, you're really the business can't go this way if the foundation is not solid from underneath. So with all that being said, where to find working capital? Well, first and foremost is your bank. Traditional bank financing is probably the most common. So everybody goes. It's the least expensive. And it's a cash flow product. I think folks need to understand what bank financing is. Cash flow. They lend on cash flow. If your business is a hockey stick trajectory, they're looking through the rearview mirror because they're looking at last year's financials. They're looking at last year's cash flow. What do you qualify for? So outside of a bank, you're going to go to your accountant, you're going to go to your CPA, you're going to go to your financial advisors, right? The last thing is the internet, and I will talk about that last. That is shark-infested waters. Let's leave it at that. It's funny because we've done a lot of work with Source. We've done a good bit with CFO Center, and I tell you, alternative lenders outside of that traditional bank, just be careful. That's all I can say is be careful. Do your due diligence. All right, so your banker, if he can't give you a traditional line of credit, he or she are probably going to, suggest maybe an SBA loan. Well, there's two types of SBA loans. There's 504 and there's 7A. Well, knowing working capital is a very vague word, right? So, but if you don't understand your business's cash flow needs and what type of working capital you need, you may choose the wrong one, right? So if you go to your bank or your banker and they can't give you a traditional interest-only revolving line of credit, he or she may say, hey, let's look at a 7A. Well, that's a great product if you're acquiring a business. It's a term loan product. So if your sales are going this way and your working capital, because it's a term loan, principal and interest, are going this way, not really probably the best product for your business, to be honest with you. And what happens is, doing this for close to 30 years, is you will see that product, if you get pushed into that by default, what will end up happening is they will tie up all your assets. You will have no leverage whatsoever outside of, now you're going to have to dip into personal liquidity or personal assets to leverage those to get additional dollars for working capital. So just understand the different types of working capital, and that's kind of the reason why I'm up here, is to explain to everybody, hey, there are other options. They may not be as cheap as bank financing. And again, that's first and foremost. That's the one everybody's going to strive for and shoot for. But at the end of the day, know what's underneath that, but know your business's cash flow needs and lean on Sourced, CFO Center, your accountant, your CPA. Those are the folks that are going to help you, right? They're going to let you on the inside of, hey, this may be a little bit more expensive, but in the long run, it's going to get you where you need to be. until you start leveling off. So as we discussed, 7A term, these are term loans, right? These are great for if you're buying, acquiring an established business. Again, principal and interest does not grow with your revenue, your sales. So it can be somewhat of a hamstrung product at the end of the day. And the working capital obviously will not grow with your revenues. So asset-based lender, factoring, alternative lending. Let's kind of talk about that. That is such a vague, shark-infested water product companies that are out there, right? So asset-based lenders. So Allied Financial, we are considered an asset-based lender. So this will be your commercial finance education class for the next 35 seconds. So asset-based lender. Asset-based lenders, the difference between an asset-based lender and a factoring company is an ABL lender does not get involved with the verification and the collections of your receivables, okay? So it is truly asset-based. They're gonna lend on receivables. They potentially will lend on machinery and equipment. They'll lend on inventory. They'll do a little bit of real estate. So that's what an asset-based lender is. A lot of banks, almost every regional or large bank in the Atlanta metro area will have an ABL, structured finance facility within the bank. So these are, as we call it in our industry, the tweeners, the companies that are in between. They're not quite, a cash flow traditional line of credit bank, but they're a great high growth, a little bit more of a risk, so they're going to be in a structured finance. So those companies, banks that have those products, they typically don't start at $20 million. Is going to be kind of their bottom line, funds out the door, funds employed type revenue companies. Factoring companies, as we discussed, factoring companies, they buy your receivables. I know everybody hates that F word. Everybody, cringes. It has been around for over 150 years. It is a good product. It's not for every business owner.
Pete, can you define a factoring company
Yeah.
and buying receivables?
So yeah, well, that's exactly. They do the complete opposite of what a asset-based lender does. So a factor or receivable finance company, what they're going to do is they're going to buy your invoices. They're going to hinge on your customer's creditworthiness, because that's basically what they're doing. They're buying the papers, right? They're not looking at an ABL lender like Allied. We're looking at financial statements. We're looking at the history of the company. We're looking at the ownership. Do they got a good product? Is it a good viable business? Did they just hit a speed bump? We look at the story, kind of like a bank would look at it, right? A factor, they're just looking at your account numbers. So if you're not doing business with, 5A1 type creditworthy customers, they're probably not going to say, hey, we'll factor Home Depot, but Joe's Depot, we're going to say, probably not. Even though in our story, if you told us that story, Allied would sit there and say, well, Joe's Depot, it looks like you've been doing business with them for 10 years. They pay their bills every 30 days, but they're just a privately held company and they don't report anything at the end, right? So you got to look at the full picture in the story. So a factor or receivable finance company, they buy your invoices. Your customers are going to make the payments back to them. So that is a revolving, right? So you give them an invoice, they lend against it, customer pays back, and now that has revolved. In either one of these cases, and I'll say this and it's mentioned, it's self-disciplined at the bottom, which is where a lot of business owners from startup until really kind of get into that year 3, they will get a line of credit, but it gets mismanaged because they don't have the source. They don't have Josh. They don't have the CFO center in there helping them and telling them, hey, how do I manage this? They get an unsecured line of credit, they borrow the money, and then it's like, whoa, I got to pay it back, and I got to service it to 0 for 30 days. Well, my business is going like this. I can't do that. Well, that was the wrong product for you because it either didn't fit your growth trajectory or it was mismanaged at the end of the day. So factor buys the invoices, receivable finance companies, kind of the same thing. They take assignment of them. And then there's asset-based lenders, which asset-based lenders are kind of behind the scenes. And there's a lot of privately held, look, we're a privately held company. There's a lot of good ones. We get 90% of our business from banks and bankers in town because we fill a void. Somebody goes there, they can't get a traditional line of credit, they don't want to lose the customer, but they want to give them a good viable option that's going to fit their business so they can help them. They get deposits, treasury merchant, and at some point, and the reason why we get all of our business, this is an Allied commercial, but we don't have prepayment or termination penalties, which are extremely common. Whether it's factor, ABL, receivable finance, they're going to typically lock you in 2 to 3 years. They get all their business online. Typically, it's a different model. But at the end of the day, you want to be able to get with the right company that is going to help you in your business and give you the working capital that you need to get to the point where, at the end of the day, you're going to level off and go to the bank. And that's why we get all of our business from banks, is we get them to point A to point B. At some point, they become a traditional bank line of credit. Bank takes them back, whether it's 8 months, 12 months, 20 months, however long they need us. So, your accountant, CPA, again, they're going to refer you. If you don't have a bank or a banker, they'll refer you there. The banker or banker will then, suggest, hey, you're not a fit for traditional, maybe an SBA, maybe an alternative lender, somebody like us or a factor. Financial advisors, same thing. They're going to kind of direct you to the bank or a banker that understands your business. Not every bank and every banker understands. This is what a lot of entrepreneurs don't really see. Banking has become a true commodity business, but at the end of the day, there's a lot of great bankers. But what separates the great bankers from everybody else is they understand their business. They understand the customer's business. That's your advocate when you hit a speed bump. And Mark and Josh and Sourced, that all these teams, they'll tell you if you hit a speed bump, because not everything is peaches and cream going through being an entrepreneur, and you're going to have hurdles. But if your banker understands your business, he's your advocate to go to credit and say, hey guys, yeah, look, I understand that this happened. It was bad project, whatever the deal was. They rectified it. They got rid of the project manager. They bid, incorrectly. So that's your advocate. So having the right bank and banker that understands your business is crucial. Very,
so what
very
you're saying, Pete, what happens if somebody in the room calls their banker or the person they know at the bank and they're not getting that kind of support? What would you advise them?
I would lean on Sourced, Mark, Josh, me. Hey, I need help. I'm not getting what I need to get from my banker, or even better yet, your banker leaves. Now all of a sudden you got a new banker. Well, you've been with your banker for 5 years. It's not easy to change banks. We all know that. It's becoming more and more difficult, and it's by choice. We're doing it, by choice, right? So you want to be able to find a good banker that understands. Lean on the experts. Lean on the folks like us that can help you and guide you.
Let me also add to that. Thank you for that plug. That was great. Where's Marco? Mark Freeman. He helped us find a new banker. We love him. So when you engage CFO services, if you're at that point yet, that's one of the things that they do, and we have an really great one because of our CFO relationship.
All right, so online, alternative lenders, factors. Dare I mention merchant cash advance lenders? Oh my God. Thank you. Thank you. For those of you that do not know or don't understand merchant cash advance lenders, it is predatory lending at its finest. If you have one in here, I'm sorry if I hurt your feelings. You probably already know that it's just not a good situation. They have structured the way they've done business so intelligently up until 6 months ago. If you go and look, there was an article written in the SFNet, which I'm the chapter president here in Atlanta, but it's our major trade association. So Ben Nicholson wrote a phenomenal article, and Southern District of New York has really kind of started putting the hammer to these merchant cash advance lenders. I consider them lender of last resort. I truly do. I
Do
think
you
they're,
have names? Like
No.
when you say merchant cash advance?
anybody that says, hey, I'm gonna give you a loan and, I'm gonna give you $100,000 and your payback is 120 and we're gonna do it for 9 months. And your simple mind, you say, oh, it's 20% interest rate. That's not bad. It's not true. Because your loan is $100,000 day one. The next day, they're gonna debit $634.76 at your account. The next day, another $634. So the
Redemption.
compounded interest rate on that is not 20%, it's probably 60%. And I have seen loans, $260,000 loan, and the customer got 180.
Oh, yeah.
I'm in the wrong business, I gotta be honest. But it happens all the time.
If they ask for your bank statements,
That's all they're lending.
that's all
exactly
they're
correct.
lending against. They're lending against your cash flow.
Doesn't matter, they
Just
say
run
it's a
from it.
term loan, it's not true. It's not true. But, look, you can go online, spread the word, lean on the experts in the room, lean on your CPAs and ask for references, but do your due diligence. If you're gonna go online and you're gonna find a factoring company or an ABL lender, ask for references. Hey, I wanna talk to 5-year customers. To me, it's so important because once you get yourself into that hamster wheel, it's hard to get out. It really, really is. Again, lean on the experts. Understand the different types of working capital, but understand the different types of working capital that are gonna fit your business, right? Every business is different. Do your due diligence. That's it. That's what I got. Any questions?
I kind of have one. I guess this would be you. How long does it take? And so when you start a new business and you're starting to work on the credit for that business, I mean, before you can do any of this stuff, you do have to establish that credit, correct? What's the best way to start that?
So that's a great question. So your banks, they're gonna want 2 years history, right?
Yep.
So that's how. But you start getting into the alternative space, you look at like an Allied Financial. We finance companies from day one. So there's lenders out there. Again, it depends on the business, but if we're not a fit, I'm sure there's companies that can, just depends on the business. But you're absolutely, that's a great question, you're right. If you don't have the history, there's somebody out there that can help. So you don't have to have the history.
You may get a text about once a week saying that I can borrow $25,500,000. That seems pretty
That's a
good.
cash advance line.
Yeah.
That's right.
It totally doesn't sound like Sam.
No.
It sounds so same.
I tell you, it started, so pre-COVID, it started with restaurants and dry cleaners. That's where they kind of made their, I guess they hitched their wagon to. After COVID, for those contractors in the room, you probably get calls literally 5 times a day. Because they have really been hot and heavy against, over trying to persuade and get contractors to move.
Okay, we got one more question, yeah.
How, like when you're starting up and you don't have like the finances to do, would you suggest to personally guarantee some stuff to build your business up, or would you say just stay away from it?
Another great question. I can tell you that we've been around for 23 years and I've been doing it for 28. And the only time we will not do a deal without a personal guarantee is if you're a foreign-owned entity. If the CEO here only owns 5%, you can't ask him to personally guarantee it. Or if you have 35 investors and the most, greatest ownership is 10%, but almost every one of our deals is going to be recourse.
Gotcha.
So whether it's a bank, here's the difference with personal guarantees. And I think people get hung up with, oh my God, it's my personal.
Mhm.
So when I am asked that question from my prospects, I tell them, look, this is a revolving line, right? So we're leveraging your receivables. We're leveraging your inventory. The only way a personal guarantee will ever come in effect, and and I can count on one hand how many times it's happened at Allied, is less than 5. And that's because they gave us fraudulent information. So, from our perspective, for our product, a personal guarantee should never come into effect unless you give us fraudulent collateral.
So it's just a safety on your side.
Or unless the
Right,
business.
and, well, it's a safety, but let's take it one step further, right? So let's just say we're in this, and then all of a sudden, we have a hiccup. And you wanna wind down your business, but you've already provided services or, delivered product to your customers. So a personal guarantee says, what's your name?
Okay.
Okay, so you say, hey, Pete, you know what? I'm sorry, man, I'm walking away. There's the keys, good luck. Right? With us, it's gonna keep you engaged for you to help us wind out and collect out on our collateral. That's what it does. Now, for a bank, it's a different story because they're cash flow lenders. So if you can't meet the obligations,
Yeah.
yes, they're coming after your personal assets.
Yeah.
For sure. But it's two different, great questions. Does that answer your question?
Yes, it does.
All right, let's give Pete a round of applause.
Thank you.
Okay. How we doing? All right, okay, good. We have another break. So, okay, so hopefully it's a little bit warmer in here for you guys, that we're chilling.
Yes.
Okay, refill your coffee, Energizers